Hi, my name is Anurag Gupta. For the past 2 years, I've had the opportunity to work on a couple of capital market issues. With me, I have the RHP that is filed by Billion Brain Garage Ventures Limited, also known as Groww. The purpose of this video is to try to understand details of this document without missing out any material facts. Let's talk basic details of the issue. So the issue opens on 4th of November and it's going to close on 7th of November. As I make this video, the IPO is subscribed 1.2 times and the grey market premium is around 12%. Of the entire issue size, 75% will be for QIBs, 15% for NII, and the remaining 10% would be kept for retail investors. The total issue size is around 6,632 crores, of which a major portion, that is 5,572 crores, is attributable to offer for sale portion, which implies that that money would not be flowing back to the business. It is rather the existing investors offloading their stake. The remaining 1,060 crores would be flowing back into the business for expansion of the business and other purposes, which we will take a look into later. They have also raised around 2,984 crores from anchor investors, leading to the IPO. Let's talk business. Assuming you and I know nothing about Groww, what is it that they do exactly in their own words? So we are a direct to consumer digital investment platform that provides wealth creation opportunities to customers through multiple financial products and services. We are India's largest and fastest growing investment platform by active users on NSE as of June 30, 2025. With Groww, customers can invest and trade in stocks, including via IPOs, derivatives, bonds, mutual funds, including Groww mutual funds, and other products. They can also avail margin trading facility and personal loan. Using Groww app or website, customer can access tools, information, and market insights across our products and services and build their investment and trading strategies. We provide customers a friendly design and deploy an in-house platform to enhance the investing experience. This pretty much sums up their business from every business they do. Let's try to understand what's their corporate structure like. So at the top, there's Billion Plain Garage Ventures, which has two material subsidiaries, Groww Investec Private Limited and Groww Credit Serve Private Limited. Groww Investec Private Limited is involved in the brokerage business, which gets most of the revenue. Groww Credit Serve is the business that they have been trying to expand recently. So Groww Credit Serve provides personal loans, personal unsecured loans, as well as a loan against securities. Who uses Groww? Groww boasts a very large customer base which spans all across India. Majority of their customer base is below the age of 30 and which comes from the working class. They have bifurcated this customer base into two parts. One being affluent users, which is over and above 2.5 million rupees, and the other is aspirational users, which is below 2.5 million rupees. So, if you look at the revenue that they get from these users, the average annual revenue per user from an aspirational user is around 3,000 rupees, whereas the same for an affluent user is around 13,700 rupees. So, which makes us understand that why they are trying to penetrate deeper into providing more and more services to the affluent users, while also making sure that they increase the customer base of aspirational users and build their journey from aspirational to affluent users. If you look at the growth numbers since 2023, they have grew over a compounded annual growth rate of 52%, which is quite staggering. What is the business model? So it can be broken down into two parts. One is growing our customer base, and second is expanding our relationship with the customers. So they do that by first trying to get more customers. It could be organically or through promotion. So through that, they get the customer into their app. Starts with the basic, which is investing in stocks and mutual funds. But over the time, Groww also offers them a lot of services, which could be derivatives or margin trading facilities. It could be loans. Recently, they've started dabbling into wealth management, and they are even considering dabbling into acting as an insurance agent for their clients. A major chunk of their revenue still comes from these broking services, followed by derivatives and MTF, and lastly, through the interest income from the loans that they are providing. But the loan book has been growing at a staggering rate. I mean, expanding into these different products. If you take a look at the margin trading facility, the outstanding MTF book as on June 30, 2025 is of around 1,000 crores, and it accounted for over 1.2% of market share, which is quite minimal. But they have recently entered this industry, so you can understand that they have been growing in this, and there's a lot more to capture in this industry. And if we take a look at the consumer credit segment, then it could be broken down into two parts. First is personal loans that they have been offering since 2022, and the next is loan against security, which is launched in February of 2025. What is their distribution model? So for personal loans, they offer personal loans to their customers in partnership with third-party banks and NBFCs. Under this model, our lending partner handles the credit underwriting and research. So they do not accept any risk. They just act as a middleman for the NBFC and someone who wants a loan on their app. If you look at the average loan on through this is around 71,138 rupees, and the tenure is around 15 months. But here comes the interesting part. They also provide on balance sheet loan, so which is where they accept the risk and they lend the money. They being Groww. So Groww Credit Serve Technology holds an NBFC license through which we provide on balance sheet personal loans, and in this, Groww handles the underwriting part. They handle all the credit check, and then basis that they give loan. Here comes the interesting part. If you look at the average loan per user, this is around 2 lakh rupees, and the average tenure is around 27 months. Meaning the low ticket loans, which is the average loan that they give to through distribution is around 70,000, but the average loan that they give towards through their own platform is around 2 lakh rupees, which means that they would get a much higher interest income from this, and this is a very good strategy. If we look at the loan book, so they had a on balance sheet loan book of around 1100 crores, and as of June 30, of which the NPA ratio is around 1.67%, which is acceptable as per the industry standards. Let's take a look at wealth management. So they have been dabbling to enter into the wealth management industry. In September 2025, they completed the acquisition of FinWizard Technology Private Limited, and they currently offer wealth management products such as distribution of mutual funds, portfolio management services, insurance products, as well as full service broking and even tax filing services. They also launched W for Wealth app, which caters to that crowd where they can track their entire investment portfolio simply on just one app, and there will be offers for the users to access, and they could also connect directly through a wealth management that is allocated to them, which would assist them in their wealth creation journey. So Groww has been very dynamic in entering into new products. If you take a look at the history of it, they have acquired India Bulls Asset Management Company, which allowed them to enter into the mutual fund as a mutual fund, which allowed them to enter it into mutual funds. Following that, they launched their first new fund offer, and as of June 30, 2000, as of now, they have around 30 products of their own. Groww has been very dynamic into firstly providing the services to their existing customer base, and also making an effort to try to provide more and more services to them, which can be seen which can be seen through their history. They acquired India Bulls and entered into mutual fund business. Now recently they acquired FinWizard, and now they are entering into wealth management business. You could see the effort being made. This effort is justified because if you look at the revenue split today, majority portion of that comes through just one segment, which is the broking business, and which is very susceptible to regulatory changes, which is why they have been pouring into these new ventures and trying to provide more and more services which could increase their wallet share and which could get them more revenue from the existing customer base. Let's talk numbers. So, if you look at the revenue from operations, a major chunk of that revenue, say, for the year ended March 2025, the total revenue was 3,900 crore, of which 3,300 crore was attributable to fees and commission income, and a small portion was attributable to loans and MTF. For the past 2 years, the loan book has went from 269 crores to 1,055 crores, which is a staggering jump and which is commendable to the bank. Let's talk about cost. So, their expenses have been categorized into three buckets. First being cost to grow, which is the marketing and promotion expenses that they do. Cost to serve, which is the expenses that they incur to maintain the business, be it expenditure on cloud infrastructure or servers. And lastly, there is cost to operate, which could be attributed to depreciation and amortization, as well as finance cost, where since they are in the lending business, they borrow money and then they lend it ahead. So the interest that they pay on the money that they have borrowed comes into the cost to operate. If you look at the profit as well, the profit has been growing consistently. Profit for year ended March 2025 was around 1,800 crores, which is effectively a profit margin of 44.92% of total income. This is quite commendable. In comparison with the other peers in the same industry, Groww has the highest active user base and the profit margin is the highest among all peers. The return on net worth is around 37%, whereas the peers in the industry are operating on a return on net worth of around 14% to 29%. So they are beating the peers in return on net worth as well. Grow has a great brand loyalty. If you take a look at the user base, a majority of their user base existing today are have been the users for over 3 years, which shows that they have been offering this, which shows the brand loyalty that they have earned from these users. Now let's talk about proceeds from this issue. So we discussed that of the total issue, around 1,060 crores would be going back to the business. Let's see where they would be utilizing this. So they have classified it into a few expenditures that they have planned, and they will be deploying this capital over the next 2 years. The first expenditure that they would be incurring would be of around 152 crores, which would be going towards cloud infrastructure. Now, since they are in the business of broking, security is very important for them, and so is ensuring that there is no downtime and uh, users get a streamlined experience throughout the period, and there are no ups and downs during that period. So, which is why they have to incur huge amount of expenditure on cloud infrastructure as well as servers to maintain the volume of transactions. So, firstly, the amount would be going towards that. Second is brand building and performance marketing. So, around 225 crores would be going towards brand building and performance marketing. They are also, so since they are expanding the lending business, around 200 crore would be going towards their subsidiary, which is involved in the lending business for augmenting or increasing its capital base. And lastly, they'll be allocating around 167 crores towards Groww Investec Private Limited, which provides MTF facility to users. After allocating the amount to these use cases and deducting the expenditure towards public issue, any balance that will be kept aside for inorganic growth through acquisitions. So we've seen that they have made a couple of acquisitions in the past and which have been favored and are is being favoring to them. So they'll be keeping a portion of this capital, which would not be more than 25% of the gross issue, and they'll be keeping it aside for inorganic growth through acquisitions. There's also a very interesting report which has been commissioned by Groww just for the purpose of this issue, and which is published on their website. You could take a look at that report, which will help you understand deeper about the industry overview, the tailwinds that have been working in favor of the industry, and some of the risks that they face. If we take a look at some of the risks that the business is susceptible to, one key thing that stands out is that they are very susceptible to changes in regulation by SEBI or RBI. The business will have to comply, and they'll have to bear whatever the impacts of that could be. There's also cutthroat competition in the industry, which with exist traditional players as well as new digital players entering the industry. So Grow has to constantly incur expenditure in order to increase their customer base, as well as provide a seamless experience to the existing user base and provide more and more value to them in order to retain the customers, so that they provide a one-stop destination for any user's investment portfolio. One small issue that I noticed in that they have highlighted in the list is the attrition rate. So if you take a look at the corporate employees, the attrition rate is for 2025 is around 27%, which has been rising year on year. And for customer service employees, the attrition rate for financial year ended 2025 is as high as 50%, which is much higher than the industry standards. So I think that could be a problem. Again, that I think such high attrition rate could be a problem, could be an issue. Also, I don't know how common it is in the industry, but what they have mentioned it explicitly in the risk section that the chairman of the board is also a non-executive director on the board of Kotak AMC, which works in the same industry. So I think that could be a conflict of interest. However, they have ensured that the terms of appointment require disclosure of potential conflicts, and they assure that he will not provide competitive service to otherwise competing business lines. A few small issues that caught my eye was they lease properties for their office spaces. They have mentioned that a few of these lease deeds may not be adequately stamped or registered, considering the size of and the entity and the volume of transactions they handle. This seems to be a very basic compliance. I don't know why. What is the issue there? And there has also been some delays observed in the payment of statutory dues. It could be attributable to any number of reasons, be it employees not completing their KYC or anything. But for an entity as established or trying to be established in the industry, I think they need to get these processes streamlined, and which is quite visible through the over the years. If you see the delay, it has been decreasing, and I think they are getting the process streamlined. One thing that we need to keep in mind is that the business of brokering is seasonal in nature. So if you take a look at it, during the festive season, there are less number of trading days, and as a result of it, the trading volume is less, which results to lower trading revenue. So the quarterly results may be a bit skewed because of that, where you will see spike in revenue in one quarter and then a slight decline. So we need to keep that in mind while to conclude, Grow has democratized investment for retail individuals. If you still look at the numbers, the penetration of retail individuals is around 5% in India as compared to 62% in the US. So, which shows that there is a lot of room for to grow, and Grow being at the forefront of this, they are in a much better position to capitalize this. That said, I hope that this information allows you to make a more informed decision whether you should apply for the IPO or not. And in case if you have already applied, then I wish that you do get an allotment. That's it from my side. Until next time, thank you.